Welcome back. In the last video, we prepared our financial statements. Now we're going to do our closing journal entries. We're assuming we are now at the end of the fiscal year, and we want to close out our revenue, expenses, and dividends to retained earnings. So that's what we're going to do. All right. So our first journal entry is we close out revenue to income summary. All right, so I'm going to go back to my trial balance, and my revenue is a credit balance of $112,000. So to close that out, to zero out the account, to make it zero, I need to debit revenue for $112,000. All right, and the offset will be income summary, so I'm going to credit income summary for $112,000. All right. Closing journal entry number 2 is close out expenses to income summary. So again, I'm going to go look on my trial balance. My expenses were $112,500 debit. So to zero those out, I'm going to need to credit $112,500. And the offset will be income summary. So I will debit income summary by the same amount. $11,250. $11,250. Okay. So, oh, jeepers creepers. Oh my goodness. All right, something super crazy just happened there, but that's okay. Sometimes something crazy happens. All right, so now we've closed out our expenses. I'm just going to double check that number because it's there we go, 11,250. Okay, that's right. All right, so step 3 is we're going to close out the income summary to retained earnings. So we know we have a credit of $112,000. So I'll just put that over here. And we know we have a debit of $11,250. And if we add those up, that gives us $100,750, which is exactly the amount of our net income. So we're basically closing out net income to retained earnings. So this is a credit balance because our revenue, which has a natural credit balance, or our credit to income summary is bigger than our debit to income summary. So to close it out, I'm going to debit income summary, because remember, income summary, we only use the account 3 times at the end of the year. Otherwise, it should always be 0. So $100,750. And the offset's going to be retained earnings. And $100,750. Okay. Now we have credited retained earnings, which is an equity account with the amount of net income. So basically, we have increased retained earnings by the amount of net income. And if we go back to our financial statements, that's exactly what we did. We increased retained earnings by the amount of net income. Our final closing journal entry is we're going to close out dividends to retained earnings. So again, I'm going to go back. My dividends are a $31,000 debit, which means I'm going to need to credit dividends to zero it out. 3,100. And the offset is going to be to retained earnings. Remember, retained earnings is an equity account. It moves the same way as equity, so it has a natural credit balance. So when I debit retained earnings, I'm basically reducing retained earnings. And if I go back to my financial statements, I did that right there. I subtracted dividends from retained earnings. So our closing journal entries basically are what feeds into our statement of retained earnings. All right, so that's the last of my closing journal entries, and I am all done. And speaking of all done, we are all done with Module 4, adjusting journal entries and closing journal entries. Now you've probably still got some homework and quizzes and stuff to do. But as far as lectures, we are done. So go out, treat yourself to a little walk or whatever you do to relax a bit, and then come back and work through this best you can. All right, as always, please, if you have any questions, reach out to me, come to office hours. You can send me an email through Canvas, or you can post to the Q&A forum. But whatever you want to do, don't sit there with a question that I can help you answer, or that maybe one of your classmates can help you answer. All right, so I hope to hear from you, and have a great week.